Hey guys, welcome back to another video. So today I wanted to get into the top 10 stocks to look forward to this week based on the recent dips that have happened over the last week, and basically what could be some really good deals on some big companies, some really well-known companies in the upcoming week. So my trading criteria for this and when selecting these stocks was that it has to have an uptrend on the 180-day 4-hour time frame. There has to be a constant uptrend pattern, so in a bullish direction. Because like I've said, obviously many times, once the trend is in your favor, it's a lot easier to make profits and to be consistent, make consistent gains when the trend is in your favor in comparison to the opposite happening. And finally, it has to be near the SMA line. So basically, the SMA line here has to make a support, basically indicating that it's not going to pull back even further, because it's really possible that since these stocks have pulled back, that they could continue to pull back. And so having that indication of seeing if the SMA line acts as support, that'll be a very good indicator for a reversal, and whether we can get in early or if it breaks the SMA line, then it's going to be an indicator that it's just going to continue to sell off, so we don't want to get in then. So our focus is going to be, like I said, about confirmation, understanding when the reversal is occurring, having that confirmation that the reversal is occurring, that SMA line being a support, using our indicators such as the MACD and the RSI, knowing that indicators are there for our advantage, but they don't always have to work, and that patterns tend to repeat themselves, but they don't always have to. And finally, if you enter early, be ready to manage your risk. So that means if you enter early in a position a little bit before reversal, when you don't have the 100% confirmation, but you have the potential of more gains because you're getting in earlier. There's also the potential that it might continue to sell off. So be ready to cut losses. Don't feel bad if you get in early and it's continuing to sell off. Don't hold on and base it off your ego because you bought in, you think it's going to go up, and you just stick to it, and at the end it doesn't go up. So manage your risk, cut your losses, learn how to lose the money. And with that being said, let's get into the top 10 list. So the first one is Apple. I've already made a video about this yesterday. Their earnings is next week. It's sold off a bit, as you can see here. It's dropped below the SMA line. There is the support at the SMA line. All right, there's recent support. This is in the 180-day 4-hour time frame, and so keep an eye on this. Check out my video last week for more info on Apple. But basically, earnings are upcoming. It could be a positive catalyst. It could be a negative catalyst. But in the long run, I think they're having some new products coming out. They're going to be announcing their iPhone. The keynote in September tends to happen. So really keep a lookout for that as a long-term investment. Next, the stock which we're going to focus on is, of course, Amazon. So Amazon is huge. Right now, Amazon, they also have their earnings next week. It has pulled back, and we are waiting for a reversal. The profit margin, it's approximately 4 to 5%. Okay, you see there are highs here of $3,225 a share, and right now it's all the way at $2,959. So there's about a 5% profit. So it's not, if you're swing trading, if you're trading in the short term, there is a profit, not too big. But I think overall, just in the long run, if you're trying to, I don't think there's going to be a time anytime soon like this where you're going to have all these stocks at such a discounted rate. There's some really good deals, and it's really possible to take advantage of them at this time. So definitely keep an eye on Amazon. Make sure the thing what happens with the whole coronavirus is that, and different news such as unemployment being at an all-time high right now, the market tends to react in cycles. So it'll see that unemployment's high, it won't really react. So then for a short period of time, it's going to react. Stocks are going to sell off, such as Amazon, such as Apple, such as Facebook. They're going to sell off, and then right after, they're going to pull back again. So as you can see, they sell off, they come back. They sell off, they come back. So these are patterns, but what patterns tend to repeat themselves, but they don't always have to. And the thing is that these cyclical developments, cyclical patterns, even though they don't tend to repeat themselves always, even though they're not guaranteed repeating, it's very possible, So set your alerts. You don't have to purchase, you don't have to invest in it straight away. You can set your alerts, put it in your watch list, understand, go look at the indicators, keep an eye on it, and see. If you see signs of a reversal, if you see signs of confirmation, invest. If not, then just wait. There's no harm in putting it in your watch list and just studying it. And even if you're paper trading, studying it, understanding when to get in, when to get out, managing your losses. This is all very helpful. This is like a really great time to get in and and experiment with your investments. All right, the next one is DocuSign. DocuSign has a potential return of 10%. Let's keep a lookout on that. It's at overall lows right now. So just, once again, set your alerts. Make sure you're keeping up to date with it because it has strong potential. The next one is Facebook. So Facebook, at the moment, it has also pulled back. Their earnings are next week. And, it has a profit margin of about 6%. And these are stocks that, look, as you can see by the RSI, it's a bit on the oversold side. And like I said before, things can get worse before getting better. So just keep an eye on that. Keep an eye on Facebook because it could be a really good deal, especially in the long term, like I said. So put it in your watch list, set your alerts, set your alerts when it crosses a certain indicator, set your alerts when it crosses the SMA line. Make sure the SMA line is acting as support. So just really stay alert during these times because this week it could pull back or it could continue to sell off. So really it's opportunities are there right now, and it's for us, it's our time to take them. Okay, next is IRBT. So this is iRobot Corp, and it's trading at $71 right now a share. Basically, its previous resistance was $85. So there is huge returns in this, almost 17 to 20%. It doesn't necessarily have to make a full recovery. Okay, it doesn't have to, but it has potential to make a recovery. It's as simple as that. Its earnings were last week. It wasn't the best thing. It served as a negative catalyst, but wait for confirmation, wait for signs of a reversal, and this could really be one that gives you the 17 to 20% profit. And for beginner traders as well, it's not too expensive, $71 a share. This is a pretty good price to enter. So keep a heads up, set your alerts like I said, because could be a really good deal. Next one I wanted to talk about is Microsoft. So Microsoft at the moment, it's trading at about $200 a share. It's crossing above the SMA line. Its previous resistance was it's about to cross previous resistance level, so you have 6-7% profit if it reaches where its previous resistance was. It already reported its earnings, so it didn't serve as the best catalyst, but it's just a matter of time until it recovers, in my opinion, because Microsoft, these tech stocks are the ones which are driving the stock market right now. These are, they're the breadwinners of the stock market, if you want to say that. So it's not like this whole era of a technology dominated sector industry is gonna stop right now because of coronavirus. It's only going to improve, in my honest opinion. So like I said, alerts, wait for the reversal, wait for confirmation, and wait for the trend to be in your favor, because it's only a matter of time until the market recovers, and it's your job to make sure that we find the opportunities and work on them. The next stock you guys should keep in your watch list is Netflix. Netflix, obviously they didn't do too well because of their recent earnings. They went down, but the good news is that there's a 15% profit margin, the recovery based off of earnings from previous highs, right? So they were trading before at around $568. Right now it's $480. So a great chance to make a good load of profits in the long run as well. Netflix, I don't know about you guys, but around me, Netflix is just not dying right now. Netflix is continuing to be used. New shows will be coming up once production starts again after coronavirus. There's going to be more shows. There's going to be continuation of series of shows which had stopped filming because of the virus. So a lot of stuff is going to be happening with Netflix, and it's established itself as a company, as a really solid company, as a staple in entertainment. So when something like Netflix goes down, you have to invest. In my opinion, you have to obviously do your own thing, but you have to, in my opinion, take advantage of these situations because they don't always happen. So this could really be a good buy. Next one, which not a lot of people are talking about at the moment, is Shopify. Shopify is on the more expensive side, especially for beginner investors, not looking to spend $930 on just one share. But their earnings are also next week, and it has a little bit over 10% profit margin. So once again, set your alerts, keep an eye on it. That's about it. Personally, I wouldn't invest in it because it's a bit too expensive in my opinion, and obviously Shopify is really good, but compared to like Amazon, I wouldn't put it in that same category in terms of long-term profit at least. Next one is Zoom video. So Zoom video that has been really good in terms of during the coronavirus time, and it got rejected by the SMA line once the market sold off, and right now I could see a profit margin of 10%. I think a lot of people said Zoom is just a coronavirus stock and all that stuff, but I think it's essentially very good for businesses, for calling. It's been around before, it's gonna be around after, and it's not gonna go away once coronavirus ends. Zoom is gonna be. It's proved that it can be a staple in in meetings and education, university classes, everything. So it's also improving its security measures now. So definitely keep your alerts on this. Keep your heads up. Follow the news. Look at websites which are reliable, which are resourceful. Don't read into the fake news. Don't read articles. Don't read message boards such as the Yahoo Finance message boards. Don't believe everything you read there because it could be misinformation. It could be information given to you from a biased perspective. So just do your own due diligence and research when discussing the stocks. And finally, the last one will be Intel Corp. All right. So Intel Corp had a massive drop because of its earnings. And so it's not really necessarily right now a part of the criteria, but the fact that it just had a huge drop in Intel it's just so important. It's the fundamentals of so many computers. I definitely think long term it's gonna should add it to your watch list. Keep it in your watch list. Keep an eye on it. Things could get even worse before getting better. You never know. But I think it's a lot. I mean, right now Mac, Apple, they've introduced their own their software. Sorry, not their software. Their own Apple Silicon, which is like their own hardware inside the corporation. I'm not exactly sure about the specifics, but basically it could be a replacement for Intel Core. And so that's I don't think that's happening right now. It's going to take some time before that fully gets established, but the majority of PCs and everything, they're still running on Intel Core, so definitely a good investment to make, to stick with. And with such a large drop, the profit margin, it could be whatever. So there's a lot of profit margin, and it could continue to sell off. It's just good to keep your eyes on it, keep it in your watch list, keep up with the news, and you never know when the opportunity arises. You act on it. As day traders, as swing traders, as long-term investors, you have opportunities, you act on it, you follow up, and you stay diligent with it. So it's just a heads up for the upcoming week. 10 stocks which you guys should look at, 10 mainstream stocks, stocks that everyone knows about, which are established themselves but are good deals. So imagine it's like an end of the year sale, for example. So just keep an eye out on that, keep them in your watch, set your alerts, keep up on the news, and who knows, you guys could get some really good deals out of this. So I hope you guys enjoyed this. Please leave a like, subscribe if you like more of this content. I post every day, and I will see you all tomorrow.